Well, we've just had quite a significant pump in the crypto market. We've seen Bitcoin shoot up as high as 20% in just a couple of hours. The entire market, a sea of green. Why is that? Well, because the entire cryptocurrency market is between 70 to 80% on average correlated to the price of Bitcoin. So guess what? Whatever Bitcoin does, generally most of the market, up to 80% of the market, will track the price of Bitcoin between 70 to 80%. So it's pretty interesting to know that going forward, considering what may happen from here on out. So in this video, I'm going to break down a little bit about this market pump. We're going to look at some technical indicators. We're going to look at some fundamental indicators and kind of break down what this pump really means. How significant is it in the grand scheme of things? Where are we sitting in terms of how high the market's got before? And we're going to look at some very exciting indicators that are showing some optimism about what may be coming in the future in regards to some great price action. So guys, stick around. You don't want to miss this one. And let's get into the video. Now, firstly, guys, I just want to promote my new course before we get into the main content. A brand new course, The Ultimate Guide for Cryptocurrency Trends in 2019. This is now on our website. It's available to purchase. It's currently $59, I believe. Yeah, $59, which is a massive discount off its major price. In this course, you're essentially going to learn the latest trends and emerging opportunities for 2019, because the market changes all the time, right? It's extremely dynamic. Opportunities come and opportunities go, and you really need to know where the trending areas are, what the platforms are behind them, what the coins are behind them, to more strategically place yourself, especially now while times are quiet, before we start really ripping into potentially, hopefully, a really good bear market to come. So look, rather than me waffling on, I'm just going to play you the intro video and then we'll get straight into the content. Hi, and welcome to our brand new course, The Ultimate Guide for Cryptocurrency Trends in 2019. My name is Bo Stoner and I will be your instructor for this course. Back in 2017, I founded Cryptocurrency Australia, an educational media brand that researches and publishes crypto economics content and commentary. We publish what is now the highest rated cryptocurrency investment course for beginners on udemy.com. In addition, around that time, I also founded a blockchain consultancy called Blockchain Management Solutions. I've been studying, investing, researching, and working in the cryptocurrency and blockchain industry now for nearly 2 years. Prior to that, I was an engineer, I was a project manager and technologist, and someone with a keen interest into financial innovation, technology, and investment. Last year, I was invited and spoke as a guest speaker at blockchain conferences in Singapore, the United States, Thailand, and here in Australia as well. This course is the second course we've ever published and has been designed to give you an educated look at the upcoming trending opportunities in the cryptocurrency industry for 2019. Cryptocurrencies evolve and change very, very rapidly, sometimes within a week to a month. So if you're not staying on top of your game and if you're not staying on top of the knowledge stack, then you're gonna get left behind. In this course, you're gonna learn about the bear market of 2018 and all the lessons learned during that period. You're also gonna learn about security token platforms, privacy coins, blockchain gaming and virtual assets, DApp platforms and protocols, and the latest tools and analysis techniques for cryptocurrency investment in 2019. My name's Bo Stoner. Thanks for watching and listening, and I hope you join me on this exciting journey. So guys, thank you for sitting through that. Look, if you're interested in this course, as I said, it is on our website. We take Bitcoin, we take Ethereum, we take a bunch of different cryptos as payment. I'll leave a link down in the description below if you're interested in checking it out. Now guys, moving on to the market. So, you know, what really happened? Well, it looks like what has happened has been on a very fundamental level. And what I mean by that is this has not been driven by news or speculation. And that actually makes sense because given we've gone through a bear market for, you know, the past 12 months, really the hype factor around money coming into the market based on news has essentially been completely eradicated, because we've seen that during the past 12 months we've had tons of really good news and the market has barely reacted. So essentially I would like to think of it as being emotionally exhausted. The market has been emotionally exhausted and just has not been reacting to any news. I would say the only thing that would have made the market go up is something like the approval of an ETF, Bitcoin ETF, which, as we know, has not happened. So this money coming in really looks to be seeming just at a fundamental level. And what does that mean? When we look at economic psychology and cyclical movements, we know that markets generally work in cycles. So what I have seen, my general interpretation is this is a cyclical movement. This is a natural kind of evolutionary movement that the crypto market is going through. And just as we've spoken about on this channel before in regards to correlations, these are like things that I really wanted to show and tell you guys that the data was telling us that the entire crypto market was between 70 and 80% correlated to Bitcoin. Now, why that's really important, because what that means is if you own a bunch of coins and it's not Bitcoin, if Bitcoin goes up, your basket of coins are going to track Bitcoin by 70 to 80%. That is incredibly important to understand and comprehend, because all bets are on Bitcoin, right? If all bets are on Bitcoin, which for me they are, whatever Bitcoin does, the market will follow. And I know that Bitcoin, my own personal conviction is I'm extremely bullish because of how much of the value proposition is around it. I won't go into that in today's video, but these correlations are extremely important to understand, and we can see that playing out in real time in front of us as we have a sea of green expectedly when Bitcoin pumps. Now, how big was this pump? Was this pump significant? Was this pump something to be excited about? Absolutely. This has been an awesome pump. We've seen the market cap go up by about 20 billion. But in terms of significance, I would say this pump is really not significant at all. I would say this is to use an example, to say this is a drop in the ocean. This is nothing. I mean, we hit a market cap in 2017, guys, of 800 billion. We are still so far from even half of that, even 400 billion. So yeah, this pump is great and shows you the potential of how fast things can go up in this space. Hey, we're just getting started. We're really just getting started. So we saw some amazing gains. To see Bitcoin pump that quick, that hard, is to be expected. That's because during the past 12 months, Bitcoin has consolidated. A lot of whales, a lot of big investors actually sold to retail investors. We've also got data to support that as well through blockchain analysis. And many people who got involved during the bear market were those with deep conviction, right? So it wasn't just anyone coming in and buying crypto during 2018. It was those with deep conviction as to like, hey, this is going somewhere. Even though the price is going down and it's in a bear market, I'm going to buy and accumulate. I believe in this thing. I'm holding for the long term. And that mindset, that philosophy, that I guess ideology are the kind of people who are going to buy this and hold it and see it out in the long term. And you can already see the gains for those people who bought later on in 2018 being realized in a big way with pumps happening this quick. So what we've got is we've got Bitcoin's circulating supply slowly being drained. Right? So think of like a big bucket of coins on a table, and think about over a year, people slowly taking those coins and then putting them into a lockbox. So the coins that are left in this basket are the only coins being traded. Right? So Bitcoin over time is becoming more and more scarce. So what you're going to have is when demand comes for Bitcoin in a short amount of time, even a small amount of money, I mean, you could potentially see price movements that will absolutely blow your mind. This is the crazy thing about Bitcoin, the game theory and the economics around how it works, because it is this scarce resource that people have sovereignty over. Over time, it's going to become more and more scarce, and less is going to be traded on open markets. Less and less people are going to want to give this away as the true value proposition for Bitcoin starts to become realized. So even though this was amazing, so good to see a pump, I really can see kind of scenarios playing out as I thought they would. It has happened later than I expected, I will admit that. But look, I think this is exciting, but I think we could do a lot better yet. But who knows when that's going to happen? We really don't know how long this is going to go for. But the good thing is that it's been sustained really over about a 12-hour period. So I'm feeling really, really optimistic. So let's now move into and look at some kind of fundamentals. Now, as you guys know, I don't really do TA, and there's a few reasons for that. I see my time as better spent researching and understanding fundamentals and going long than sitting there all day trying to read charts and trying to outmaneuver the market, because statistically, I will fail at that. 95% of people will fail at that. So I'd rather just go fundamentals and play the long game. Now, what we have here are some really good fundamental indicators. So for the red line here, we have the 20-day moving average. The black line is the 50-day, and the green line is the 200-day moving average. This just gives us like a really good kind of indicator on how the market is moving along over time and how it's reacting and how it's kind of feeling. I guess that's for lack of a better term. Now, during this whole period here, right, we can see that the price has been significantly under this 200-day moving average. So even like for the later part of 2018, anyone that uses the 200-day moving average as an indicator was looking at the price of Bitcoin and going, "Oh my God, look at how much lower." I mean, at this point here, Bitcoin was not only under the 200-day moving average, it was under the 50-day moving average, and it was under the 20-day moving average as well. So if you're a buyer using these fundamentals, you're going, "Oh my God, this is like the buying opportunity of a lifetime right down here," right? But even during right up to just yesterday, essentially, Bitcoin has been significantly under the 200-day moving average. But you can see it has now crossed the 200-day moving average, and we can see the 20, and it's actually above the 20 and the 50 as well. Now, down below here, we've got the Mayer multiple. But before we get into that, what I want to do is just have a look at the global charts and kind of bring you guys some interesting perspective about where we're kind of sitting and how exciting this is compared to the last kind of run up to the bull market. So what I first want you to look at is let's just zoom in here and have a look at the market cap. So when you zoom out, regardless of yesterday's pump, it's still just a blip. It's just a blip on the chart, right? So last time we hit a peak, a very, very quick peak of 828 billion. Now, another thing I want you to note is how fast bull runs happen. Bull runs happen in crypto so incredibly quick that if you're not prepared, you're probably going to miss out. You're going to freak out, you're going to stress, and things are not going to go to plan. This is where kind of planning and proper preparation during the months prior and the years prior leading up to these, things like dollar cost averaging, like playing the long game, like having your house in order, having your exchanges sorted out, all this kind of stuff is going to better prepare you for when these runs happen. So we can see here that the majority of the market cap in the last bull run, let's just go back to when it was 200 billion, right? So it was 200 billion on November the 14th, right? So then on January, it was January the 7th. Okay, so we're talking essentially 6 to 7 weeks. It hit 790, it hit 800 billion. So the market cap went 4x in just a matter of weeks, about 6 weeks. That's how quick this market moves. Crypto is incredibly volatile, both up and down, as anyone that's been in this for a while is going to know. Now, more importantly, guys, what I want to bring your attention to is trading volume. And this is what has excited me during the past kind of couple of weeks I've been paying attention to. So down here, this grey line is the 24-hour trading volume, and this is a cumulative trading volume across all exchanges in the world, or at least all major exchanges that have reputable data. And we can see that leading up to the last bull run, we had really low trading volumes of around, $2 to $3 billion. It was pretty low, but at the very, very peak, when it hit 800 billion, we had a 24-hour trading volume of 46 billion, and then it started to peter off from there. Now, as we can see, as the market started to go through its cycle, as it started to correct, the trading volume reduced, but the trading volume still stayed over $10 billion, which was significantly higher during the quiet part of 2017. You can see the trading volume here was $500 million, yet in the bear market of 2018, we were over 10 billion. So that was like over a 10. That was about a sort of a 100 to 200% increase in trading volume, despite being in a total bear market. So that told me a few things. It told me, one, things are very optimistic long term because we have infrastructure in place, more people involved, more people are actually using and trading this asset. But secondly, at a fundamental level, the market may be underpriced here. The market may be significantly underpriced. Now, what was exciting was leading into the later part of 2018 and into early 2019, we can see the trading volume started to pick up, started to really ramp up, and we were hitting these kind of $25 to $30 billion marks. Now, coming back to here, like we're talking trading volumes that were up near the peak of the market cap during the top of the bull run. Yet we are still massively under where the bull run market cap hit. We hit an 800 billion market cap, yet we're hitting trading volumes that were equivalent to nearly the top of the market cap. That's telling me there's a lot of activity going on. There's a lot of people getting interested. These exchanges are starting to switch on as some kind of base level fundamental value is starting to creep in. Now, what is amazing is that during the past 24 hours, we hit $69.2 billion of trading volume. That is massive. Now, the peak trading volume that we hit during the last bull market, if we can try and get an exact figure here, we've got 61 I just saw. Let's move in and look at a bit more granular volume here. So we hit, what was the peak here? We hit 44, 59, 60, 61.3, okay? That looks like 67. There you go. So we have just hit $69.2 billion. We've got a market cap, back in the peak of the bull run at $759 billion. We had a 24-hour trading volume is $67 billion. So we are up near the peak trading volumes of the peak of the bull run in 2017, and we're just getting started. We're at 166 billion market cap. I mean, we've got to get to and above 800, around 830 billion before we're even past where the market got before. That's very exciting. That is extremely exciting to me, and that is showing a lot of optimism. But just to keep it in check, just to keep things kind of rational, we don't want to get over exuberant. We don't want to go crazy with speculation. Let's look at some other indicators. So this is the Mayer multiple. The Mayer multiple is a great indicator that was used by Trace Mayer. I believe some other people coined the term Mayer multiple and put together some charts for people to use. But essentially what it does is it produces a ratio by dividing the current price of Bitcoin by its 200-day moving average. So it takes the current price, so it's $4,859 US, and then divides it by the price of the 200-day moving average, and then you get a ratio. Now what they do is they plot this ratio over time, and it shows when this ratio has gone above some kind of key levels. So Trace has essentially said that based on the data, or the charts have said that based on the data, the best time to accumulate Bitcoin was when the Mayer multiple was below 2.4. So you can see this orange line here. This orange line is a Mayer multiple of 2.4, and you can see that during the entire 2018 we've been significantly under. The Mayer multiple at times, for most of the year, was under 1. So that was essentially saying that if you think about using these indicators in different ways, that the market was underpricing Bitcoin during that time. That is the way I interpret it, is that the market was underpricing the fundamental value of Bitcoin, is that the market was being irrational to the negative instead of irrational to the positive, which is what we had during the 2017 speculative bubble. So now, even though we've just had a pump, the Mayer multiple has still only hit 1. So this is showing things at a fundamental level that, yeah, like we just had a little pump, but on the grand scale of things, on how quick and how far this market can move, I mean, we're really kind of just getting started. This is really nothing at all. Now, looking at kind of some other data, some other articles. Here's one that I plucked from CCN from Pantera Capital CEO Dan Moorhead. Now, this was back in April 2018, where Dan actually said a $40 trillion market cap was definitely possible. So he said this in an interview. So he said that obviously we're very bullish on the space. We think we're way below, maybe an order of magnitude or two below the real fundamental fair value of blockchain, he said, stating later that the industry as a whole is $400 billion. So this was back in... So we're talking back, let's just go all, we're talking back in April 2018, okay? So this is back around April, May, right? So this is around this area here. he said it could easily go to 4 trillion, and 40 trillion is definitely possible. Now, insanely, that if the market cap reached a 40 trillion, based on the current circulating supply of Bitcoin would be trading at $1 million. $1 million per coin. Sounds insane, right? Well, let's just come back in 10 years and see where it's at. But like, this is kind of people that have been in the space for a long time. So Pantera Capital is specifically a blockchain and crypto investment fund. They do capital raising. They invest into crypto projects and cryptocurrencies. That is what they do. And you know, you've got other people as well. I don't have the article in front of me, but you've got other people as well, like the Winklevoss twins, who are saying the same thing. And what I would posit the question to you is why not? Like, why couldn't we see a crypto market cap like that? It's not going to happen overnight. It's going to take many years. But I think, you know, when we look at existing equities and we look at the value proposition that blockchain gives over existing equities, like transparency and distributed ledgers and sovereignty over money and the hardness of money, and I mean, I could just go on and on. Like, I really do think that it is not out of bounds of being possible. So very exciting, and again, put some perspective on just how small this pump actually was. Now, coming back to crypto correlations, I know I've talked about this, guys, in the past, but I just want to really quickly broach on it again, because I think it's extremely important to understand if you are an investor in this space. So this was done in November 2018 by this guy Vivek. I'll leave all links to these articles and charts are down in the description below, guys. So he's done an excellent job by plotting the correlations of crypto assets against Bitcoin. And long story short, as I told you earlier, the correlation values of all crypto assets to Bitcoin are between 70 to 80%, or 0.7 to 0.8. So what that essentially means is, if you hold, let's just say you hold 10 cryptocurrencies, 10 completely random cryptocurrencies, and the price of Bitcoin goes up. Well, of that basket of 10, it will track, the total basket you have will track Bitcoin between 70 to 80%. So you'll have an error, you'll have a margin of error between plus or minus 20%. So what I mean, this is like, this is really important to understand. Now, these correlations actually got closer to 1 during the bear market. So many people thought, and I could name names, but I won't, but so many people thought that this bear market was going to kill off all these coins, and it was only going to be Bitcoin going up, and you know, there were people screaming from the rooftops, Bitcoin maximalism. But the data is the most important thing. People's opinions mean nothing. What is the data, right? Well, actually, no, I take that back. People's opinions are important, but the data is more important, that it actually shows us objectively what is happening behind the scenes. Now, these correlations during 2018 increased. They didn't go down, they went up, they increased, they got closer to Bitcoin. So the entire market, when Bitcoin pumps, exactly as we're going to see, oh, my internet's just died, exactly as we're going to see, is going to get closer and closer to Bitcoin. Now, I prepared an article yesterday, how to prepare for the next crypto bull run. It looks like my internet's just died, so I'm not going to be able to go through that. But I'm going to leave a link down to it below, guys, where essentially throughout the article, I go in some things you can do to start cleaning house. What I mean by that is, if you're like me, you've got a ton of different accounts on exchanges. Go to those exchanges, look at what coins you have, get them into one spot, preferably a hardware wallet. Reset all your passwords on your exchanges. Use something like LastPass, which is free, which is an amazing password manager for you. You can create random passwords, and it's extremely simple and easy to use. Do other things like look at your data security. Where have you got your private keys stored? Have you got them on your computer? If you do have them on your computer, get them off. Get them onto paper, get in a safe location somewhere, and just start reviewing where you've got things, how you've got things set up, and how you can improve your overall situation should a full bear market hit at some point. You want to be prepared now before it hits, because when it hits, you know, things go crazy. You might want to sell some on an exchange. You might want to move some to another location. So it's best to be prepared now before that crazy time hits again, if it does hit. So guys, that's it for the video. I hope you enjoyed. I hope this content was valuable to you. I hope it was worth your time. If you like the video, the likes are really, really appreciated. It helps my videos get some more visibility. YouTube's algorithm works by essentially the more likes you get and comments and things like that, it helps to suggest your content to other people. You know, we are a relatively small channel, so if you liked the video, likes are really appreciated. Leave me a comment, guys. Tell me what you thought. I always read the comments. I respond to most of them. And if you haven't subscribed, make sure to hit the little subscribe button, hit the little bell notification as well, so you're notified of my videos, and would be stoked to have you on this channel with us. So guys, thanks for watching. Thank you for your time. Hope you enjoyed, and I'll catch you in the next video. Cheers.